as we continue that stair step up. Kevin Green joins me, talking vol, talking levels, KG. The stair step in the VIX, it really is starting to become a interesting thing. This is quite a sight. There are a lot of folks who say you can't do technical analysis on the VIX given its mean reverting nature. But if I were to, boy, I would say this thing looks like it's a coiled spring.
It is still coiling up when it comes to volatility, Oliver, and rightfully so. Obviously, there's a lot of uncertainty in the market. What's actually very interesting, though, is that we're not seeing a little bit more of an aggressive bid when it comes to VIX, as you're talking about, you know, an incremental move to the upside here. Yes, there's some buying on the wings, especially on the downside when you're looking at the S&P options, which is obviously fueling the VIX, but you would think that we would maybe see a little bit more of a catch up there. But the backwardation is still intact. Actually, one of the largest backwardations that we've seen over the last year or so, right? And so this is just measuring spot VIX minus the front month futures contract. That just shows that there's still near-term uncertainty within the market. Until that actually starts to trend to the downside here, you have to prepare for maybe some greater volatility within the equity markets as a whole. But you also have to make that case on the other side, like how much more can it go up from here? A lot more. It could go up a lot more from here, but you start thinking, okay, when can I actually start shorting the VIX over the longer term, right? And where's that opportunity? Because at some point in time, that will creep into the market. I'm not sure if right now is actually that time, but the incremental nature of VIX kind of stair stepping to the upside is something of an outlier if you kind of look at the past.
No, it totally is. It's just something that you don't really see that much. It's kind of against the nature. That's kind of why I was joking about how people say you can't do technical analysis on the VIX, but boy, it sure kind of looks like something that you see in other places that's more uncharacteristic of an asset class that usually just goes really big spikes and then comes back down. So if we are kind of coiling the spring, KG, if we look at the chart for the S&P, if we envision this downside as just the appetizer, the prelim, the amuse-bouche, where could we be going?
That is actually a really good question. If I were, I will be.
I'm not trying to be gross here, but like.
No, I will be, frank with you. If you're actually looking at the price action, Oliver, I would not be surprised if we do see a 4 handle on the S&P 500 in the next couple of months. Based on the monthly chart, just in general, what we have seen in the past is a situation where we've had the breaking of the monthly RSI to the downside. We have MACD also hinging to the downside here, and we usually come within 3% of the 50-month moving average anytime that we do see that setup. We've only had one situation where we did not immediately. We kind of ramped back to the upside, and then we saw a further breakdown, and that was back in the late 90s and early 2000s, the dot-com bubble. So if you're looking at the 50-period moving average on the monthly chart, you're looking at around 46.32. And that kind of aligns with some of the flows that we've seen last week, the 4,400 puts being picked up. Okay, right. Let me also preface this by saying this is not going to be something, hopefully, that happens overnight. This is something that actually happens in time here. But the monthly chart is definitely bearish. All of the indications say that we have further downside to go here. Just based on the technicals, I would look at that 50-period moving average on the monthly as your target right now.
Okay. Well, I think we have to zoom out a little bit. So I think that's a really good answer to the question there, because it's not quite cutting it to kind of look at the daily stuff right now, the speed at which it's moving. And now that we cracked that 5,800 and the 5,700 and the election level, it feels like it doesn't do justice to take a 1-year look at this because of the technical breakage. So I like that month look. I know that you've also got a shorter term look again, though, at momentum, relative strength. And I mean, if you're looking like to try and stab, I mean, are we getting close to like oversold where if you're real nimble, you can try and make a move?
Yeah, so the characteristics of a bear market, it doesn't usually just go down in a straight line. It takes some time in order for it to develop, right? And you're going to need to have that news flow in order to do so. So obviously, you look at the longer time frame, you could come up with that bearish case, but the technicals in the near term still are meaningful. For instance, that 200-day moving average, it's been holding up, and now it actually just broke to the downside here. Let's see if we close below it. But if we look at the E-mini S&P 500 futures chart, which is kind of what you're highlighting, RSI is actually at the lowest level that we've seen since October of 2023. And this is kind of the intraday chart. But yeah, if we go to this chart here, lowest level since 2023, giving you kind of the thought of it doesn't match the drawdown of October 2023, but the momentum of price is matching that. So what you would want to see is actually RSI kind of hinging a little bit higher, and then maybe getting a counter trend bounce. And what we mean by counter trend is it doesn't mean go back to the all-time highs. It means that we try to recoup some of the losses here, hit key areas of resistance. That could be the 50-day moving average. That could be the 200-day moving average. That could be the 20-day moving average, what have you here. But that is something that is on the radar here. If you kind of go in the past, could this be a buying opportunity for long-term investors, the DCA in their account? Yes, you can make that case because you don't know how far we can go from here to the downside just looking at that daily chart. But we are breaking, once again, some key levels, looking like we're going to close that gap on the E-mini S&P 500, sitting at around 56.75 to the downside 56.30. So you want to also maybe see that gap being filled. There probably will be a little bit of a void going into that gap fill where it kind of pushes prices to the downside, and then maybe we get a counter trend bounce once again once we kind of hit that 56.30 level here. I would say on the intraday basis, though, just something to keep your eye out on. 5600 is kind of hitting the radar here today. We're sitting at around 5683 right now. 5600, another 80 points to the downside. So that could be an area where we get a strong bounce in the market. And these negative gamma levels over the last 4 trading sessions that we've been able to highlight, we've been coming fairly close to them and seeing very strong bounces on an intraday basis. Now, does that mean that we hold them? No, but they have been key areas of support in the market. To the upside, 5750, first area of resistance, and then 5800. So still a wide band here that complements that the high VIX, which shows that implied volatility is still fairly high.
Okay. Yeah, right now at 26.5, realized vol, spot vol, I mean, it's pretty juicy too, but we're still below the December levels. So that stair step maybe has one more trick left up its sleeve. KG, I know you got a thought on the dollar real quick. Hit me. I'm of the macro mind this morning.
Yeah, so I would say if you're looking at the technicals of the dollar, this is a near-term area of support, 103.4. So you would be looking for a little bit of a bounce here. Now, this is like past the 61.8% retracement from high to low on this chart. So that does mean that it is bearish, but you would look at a little bit of a counter trend rally to the upside to around 105.15 here, Oliver. So maybe a near-term bounce. RSI, once again, oversold. The dollar really does a good job of trying to coil at those lows for RSI rather than seeing a V-shaped bottom. So you would look at some consolidation here first before a retracement bounce to the upside for the dollar. So we'll see if the macroeconomic data is going to align. I will say, though, if you want a counter trend bounce, I think CPI gives you the most favorable economic data set this week, which is going to be on Wednesday, if I'm not mistaken, to get you a strong counter trend bounce, because a lot of the items are going to be, for the most part, seeing a deceleration in prices, especially when you're looking at energy. And I would just get a little bit more concerned about the utility component, which is only around 5.5%, maybe 6% of the overall index, which we are seeing some pressure there.
So you're seeing a relief. You're seeing a counter trend for the stock market, not the dollar, because if inflation's light, the dollar's probably going to get a hit, right?
No, I think no, I don't. I think the dollar is actually moving with equities right now. So weaker dollar, I think, is showing weaker equities. I think you would see a stronger dollar, stronger equities.
That'd be fun.
I would say that Wednesday opportunity is definitely there.
That'd be interesting.
Top in the market.
That would be interesting if inflation light means dollar strong. That would mean we've got some really interesting policy stuff that's getting priced through, because usually that's dollar up. Dollar down. It's usually dollar down if inflation's light. So that'd be fun. Love it, KG. Thank you, sir. Appreciate the thoughts. Good stuff. Good chart.